You log into your business account and see two words you weren't expecting: under review. And when you call, nobody can quite tell you what it means or how long it will last. Here is what is actually happening. The most useful thing to understand is that the review did not start with that notification. It started earlier, inside a monitoring system, and the notification is simply the point at which the bank decided you needed to know. A review is a structured internal process, not a vague suspicion. When an account enters review, the bank assigns it to a compliance or risk function whose job is to answer one specific question. Does the activity in this account match what the bank knows and expects about this business? Everything that happens during the review serves that one question. What the bank examines is the gap between expectation and reality. It compares your recent transaction patterns against the baseline established when you opened the account. It checks whether the documentation on file still explains what the account is doing. It looks at whether anything external has changed. The review is the bank reconciling its picture of your business against the current evidence. The reason it feels like a black box is structural. The bank is often legally constrained in what it can tell you, and the team running the review is not the team you can reach. The people you talk to cannot see the review. The people running it do not talk to customers. That gap is what produces the silence. A review ends one of three ways. The account is cleared and returns to normal. The bank requests specific documentation to close a gap it found. Or it decides the relationship exceeds its risk tolerance and moves to exit. What you do during the review, specifically how clearly you can explain your account's activity, influences which of those three outcomes you get.